what does today's rally, Friday's post non-farm payroll rally, really mean? And what does it tell us about the remainder of the year? How can we best position ourselves? And I'm going to talk about 5-minute time frames, 1-hour time frames, and daily time frames throughout this video. If you don't know who I am, I'm Raghee Horner, lead trader over at the Simpler Futures and the Sector Secrets Mastery Rooms. For those of you that are ETF traders, options traders, stock traders, futures traders, I look at the market as really one big combined thread. We want to think about what the ES means to XLK, XLF, Apple, risk appetite, bonds. And if we can find those connective threads, we can find better follow through. That's my philosophy. So let's jump into it. When we take a look at the S&P, or really any symbol, gang, there's 3 ways that I look at it in terms of time horizon and follow through. The time frame is what dictates that. My day trading time frame is going to be the 5-minute chart. My swing trading time frames are either going to be the 1 hour or the daily. The big difference is my 1 hour can be, say, a 1 to 3, maybe 5-day time horizon, while the daily could be really 2 to 10 days. I'm going to have a longer expiration on the daily swing than I would the 1 hour. But the levels, the daily price movement range, yellow and gray levels, are the same on both these time frames. Let's talk about what we did today. Now, futures traders, remember, you're not waiting for 9:30 to do something necessarily. You've got that non-farm payroll. You've got that pre-market. You've got nearly a 24-hour market that you can take advantage of. Interestingly enough, look at all the time that we sat in zones where it made sense to think about support. And then after midnight, gang, the S&P went to a neutral environment. It took all of today to turn the 1 hour into an uptrend. Now, if the 1 hour can start to trend, then there is possibly hope for the daily to go back into a trend as well. Once again, same zones. This daily price movement range, volatility-based support zone, is the same exact price level on the 1 hour as it is the daily. That's the whole idea, that we're looking at historical volatility and then we're superimposing that on the chart regardless of the time frame, so we can see these levels regardless of what we're looking at. They're the same because it's based on a 6-month historical look back. All right. Having said that, these gray zones are support. These yellow zones are resistance. We've gone from support to resistance in one fell swoop. The saying goes, don't fade a Friday. I would not bet against a little bit of early Monday follow through. Now, if that's the case, that's not going to really be a daily or 60-minute setup. When I'm looking at the Monday open, 9:30, I'm going to be looking at what kind of Sunday session, because remember, the S&P is going to be opening Sunday evening, 6 p.m. Eastern. What type of trend are we inheriting come Sunday? And can we buy into the hourly price movement range going into Monday? Can we see some follow through from what is 2 things? A lot of optimism based on, well, let me show you why. And I'm going to talk a little bit more about the reason I am looking for a Fed pivot, because I think sometimes traders are so used to analysts and other traders talking their book and talking their opinion as opposed to talking the data. Everything I'm going to talk about as to why there seems to be a renewed optimism. I'm not guessing at it. We had a monster rally in the Dow, NASDAQ, S&P, even bond yields, which struggled earlier this morning, were able to, through lunchtime, stabilize and move higher into the close. Even bond yields move lower. This is the Fed Fund Futures, gang. This is what the Federal Reserve knows that we collectively as traders and investors are saying about what we think they're going to do, right? This is not about predicting. This is not about necessarily trying to say it's time to get bullish and nothing's going to get in our way. It's simply our way of understanding that the optimism that we're seeing in the equity markets are probably largely influenced by expecting a hold. That's a hold column, gang, on the June 14 meeting. That's now, right? After non-farm, this is the way this data sits. Another hold for the July 26th meeting. But this is what gets really interesting. The second tallest column for July, the second possibility, not the probability, this is the probability here, this is a possibility, is a 1/4 point cut. All right, that's the second most likely thing to happen. Doesn't mean that's what's going to happen, but that means that traders who are spending their money to open a trade in the Fed Fund futures are betting on that. A little too soon for dovishness, but when we get out into September, the leading expectation is a 1/4 point cut, right? We get out into November. If at this point if this is the way this thing looks, if we have not seen that Fed pivot at this point, there is going to be a problem. The Federal Reserve knows this is what we're doing. So they are either consciously saying nothing about taking this expectation off the table, which, by the way, Powell could have easily done on Wednesday. Does anyone here not think that Powell is not completely aware of where expectations are? Of course he is. They crack open their Bloomberg terminal and there that data is. So this data that we're looking at is the same data that they're looking at. Yes? And so they know what expectations are and they have two choices. Either squash them and redirect because it's way off, or just let it slide because they're not completely uncertain about whether or not they're possibly going to cut later on this year. I think it's the latter, based on this data, not on opinion. So Powell can say whatever he wants to say, but the mere fact that he did not course correct what is a very dovish Fed Fund futures speaks volumes. And then the non-farm payroll, collectively traders and investors said, were even more dovish, meaning expecting a Fed pivot than before. Look, I would not be surprised, and he probably should, course correct these rather ridiculous expectations of a 1/4 point cut in July. I would absolutely assume a hold through June, a hold through July, possibly even a hold through September, and the Fed pivot coming in November. Sure, September is possible, but no, if he can wait till November, he will, and then we'll get our 1/4 point cut. That is where it is absolutely baked into the cake. It's not a hedge. See, September's a maybe. November is absolutely, we're going to have a dovish Federal Reserve at this point in the year. All right. So this is what we've got, gang. And if you're wondering, what about recession? One of the things we talked about in This Week in the Markets. Check out what we have. You can get a $7 trial for a month of This Week in the Markets. And you can see why I was explaining to traders last week in the most recent issue that a recession could actually be bullish for equities. Remember, the economy is not the stock market, and we could actually see if we trip into recession, why that's bullish for stonks. Okay. All right, gang. As always, working the data and whether that's syncing up with price action. I've been talking about stick to the long side for a very long time. I don't want to be a skipping record, but this is the data that maps to why I would prefer to be a buyer at significant lows. That's going to extend to financials. That's going to extend to healthcare. That's even going to extend to bonds and the euro. That's where I want to continue to take advantage of this glacially paced macroeconomic cycle that we're all trading through. If you don't want to deal with that nonsense, I get it. Just continue short-term swing trade off of 1 hour or day trade off of 5, and you can stay nimble, get in, get out, get flat, start all over again. Nothing wrong with that either. I'll see you all in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.